Hello everyone, welcome back to my channel Crypto Update. If you're new here, make sure to subscribe as well as click on the thumbs up button and leave a comment below. Between ETF, funds, private and public companies, governments and even DeFi, it only comes out 10.33% of total supply of Bitcoin. The remaining Bitcoins is in the hands of individuals or lost for good. What makes Bitcoin truly unusual is that 52.8% of its total supply is held by everyday people, not banks, not funds, not exchanges, not even miners. This is the real strength of Bitcoin, I would have said as a novice crypto enthusiast, but now I say the distribution is successful. A longitudinal study of Bitcoin's supply distribution since the Genesis block shows that Bitcoin continues a 12-year trend of distributing evenly. Small holders are a rising force. As of April 2025, over 20 million Bitcoin have already been mined, meaning 94% of Bitcoin's total supply is already in circulation. Bitcoin supply issuance continues to slow, with the 2028 having set to reduce daily mining rewards from 450 Bitcoin per day in 2025 to 225 Bitcoin per day after the halving. That leaves only around 1.4 million Bitcoin to be issued. With the current 6.25 Bitcoin block reward, the remaining supply will take over 100 more years to fully mint. Experts estimate 99.9% of all Bitcoin will be mined by 2140, with miners mostly earning fees rather than subsidies by then. This controlled supply schedule is a key aspect of Bitcoin's value proposition. As the issuance slows and demand grows, Bitcoin is designed to become scarcer over time, an attractive attribute for investors facing unlimited fiat money printing and currency debasement. Additionally, Bitcoin's inflation rate, which started extraordinarily high, has steadily declined due to its halving events every 4 years. This has stabilized the inflation rate at much lower levels, enhancing Bitcoin's appeal as a store of value. The ongoing reduction in Bitcoin's inflation rate highlights its disinflationary characteristics, making it an attractive option for investors looking for a hedge against traditional fiat currency inflation, which is often more unpredictable and higher. 94% of the 21 million Bitcoin supply has been mined, based on its predictable predetermined issuance schedule, programmed in the protocol code, enforced by consensus, and verified through hundreds of thousands of globally distributed network nodes. Despite the recent Bitcoin price drop, the number of addresses holding over 1,000 Bitcoin has surged to a 4-month high. Whales are strategically accumulating assets at a rate triple that of annual new Bitcoin supply, indicating a shift in wealth distribution within the cryptocurrency. Gold moves first but Bitcoin follows harder. Why? Because of distribution and depth. As Bitcoin monetizes, it's becoming a sharper proxy for global money supply. It makes tracking it more closely and with shorter lag. Eventually, Bitcoin won't follow gold. It'll front-run it. Before launching Bitcoin on January 8, 2009, Satoshi had an early version coded, known as the November 2008 version. Different block time, reward, difficulty adjustment, and more. 52% of the electricity powering global Bitcoin mining is from zero-emission sustainable energy sources, according to new research by Cambridge University. One reason why Bitcoin is rising, because it's a front-running global liquidity. Global M2 money supply has surged to $110 trillion. Historically, Bitcoin leads liquidity trends by about 3 months and rate cuts haven't even started yet. When liquidity expands, scarce assets outperform. Bitcoin, with its hard capitalization of only 21 million, is built for this moment. But the real question is what happens when the real liquidity wave hits. Bitcoin holders wouldn't want Bitcoin to fall below $80,000. This will be a multi-billion-dollar upset. Big companies are relying on this thing to follow M2 money supply. Isn't it interesting and a bit coincidence? Everything bounces on Bitcoin. Liquidity is not just M2. It is risk appetite, bank regulations, monetary policy. We should get new numbers from that in a few days. Bitcoin only recently made its first, minor, new all-time high against M1 money supply. More liquidity means there is more demand for hard assets in the market. 2025 could be explosive post-halving for Bitcoin. Watch out for the money printer. A simple chart comparing Bitcoin's price to the global M2 money supply, the total amount of money in circulation across major economies, paints a stunning picture. Historically, Bitcoin has shown an over 80% correlation to this measure of global liquidity. When more money flows into the system, Bitcoin tends to absorb that liquidity and rally. When liquidity contracts, Bitcoin struggles. And right now, according to the latest M2 data, global liquidity isn't just rising, it's exploding. But before you load up your bags and count your future millions, there's a critical detail that most people are missing. And if you don't understand it, you could be making a dangerous mistake. Global M2 includes cash and bank deposits across major economies like the US Eurozone and China. It's one of the broadest measures of how much money exists in the world. Over the past few weeks, global M2 surged far beyond expectations. If Bitcoin continues following this correlation, it points to a price north of $220,000 by July. Importantly, this liquidity surge isn't being driven by the United States. While the Federal Reserve remains tight, raising rates and restricting liquidity, other countries around the world are cutting rates and printing money to combat slowing growth and the pressures of a growing global trade war. This is a global phenomenon, not just an American one. Liquidity from economies like China, Europe, and emerging markets is flooding into the system, and Bitcoin historically doesn't care where the money comes from. This is all for today. Thank you for watching.